This week, the cryptocurrency market marked a period of dynamic resilience and excitement, even with the hurdles of climbing US inflation and the prospects of higher interest rates, which usually make investors think twice about putting their money into riskier choices like Bitcoin. We've seen quite the opposite happen. Let's dive into the latest trends in the crypto market with GoMining. A rising US inflation challenges Bitcoin's climb. The total crypto market capitalization posted a 6% weekly increase, rising from 2.3 trillion on April 5th to 2.5 trillion on April 12th. Bitcoin, as always, commands the lion's share of this market cap at $1.4 trillion. As evidenced by the 12-month US price growth accelerating from 3.2% in February to 3.5% in March, the economic backdrop paints a complex picture. When inflation goes up, it potentially leads to a tighter monetary policy to counteract inflation, which usually results in higher interest rates as well. Rising interest rates act as a headwind towards Bitcoin's growth, as they can make riskier assets, including Bitcoin, less attractive compared to traditional safe haven assets. Traders' optimism and high trading volumes. Still, there's overall optimism among the crypto market players, which is clearly seen among derivatives traders, as highlighted by the spike in CME premiums following Bitcoin's steady rise from $65,000. The annualized Bitcoin premium rose from a 3-month low of 9% on Friday to 30.5% on Monday, suggesting that traders are willing to pay a higher price for futures contracts, anticipating further price increases and an overall bullish trend. Taking into account on-chain data, which reveals that the spot trading volume on centralized exchanges doubled in March, surpassing $2.5 trillion for the first time since 2021. We see further evidence of bullish momentum. First of all, this means more liquidity is available, which indicates that large transactions can be made without greatly affecting the market price. It is usually the case that more people enter the market when they are optimistic about its direction. They're seeing prices going up and want a piece of it, so interest and activity are all on the rise. As more investors start showing interest, it's likely that the market will heat up even further. Ethereum's ETF anticipation and market sentiment surge. Meanwhile, Ether's upward swing gets additional support from the excitement among traders and hype surrounding the launch of ETFs. According to Deribit data, open interest in ETH options stands at $600 million at a $4,000 execution price, showcasing a vibrant market sentiment. At the levels of $3,700 and $5,000, the figure stands at $375 million. The assets of ERC20 propelled by Ethereum's surge are also notably performing better, hinting at a growing confidence in Ethereum's future prospects. However, Ethereum futures funding rates lag behind those of Bitcoin, indicating traders' expectations of Ethereum's continued underperformance relative to its peer. Potential mining shifts and record network difficulty ahead of the Bitcoin halving. The network's difficulty has undergone its final recalibration before the halving, increasing by 3.92% to a record 86.39 trillion hashes. With the halving expected to occur on April 19th, the industry braces for impact. The digital landscape of Bitcoin mining is poised for a seismic shift post-halving, as highlighted by Galaxy Digital's research. The halving event is expected to render 15 to 20% of the network's computational power unprofitable. This could potentially lead to these less efficient operations being phased out of the network. Despite the upcoming significant change, the perspective within the industry remains optimistic. According to the CEO of CryptoQuant, following the Bitcoin halving event in 2020, the crypto market experienced a parabolic bull run, which was substantial enough to cover the increased cost of mining and still lead to profitability in mining Bitcoin. On-chain indicators echo the sentiment following previous halvings, suggesting a favorable environment this time as well. So that's all we have for this one. Make sure to subscribe to GoMining for more videos just like this one. Stay tuned for the next one.